we go. So what I want to do is I want to talk about the companies that we feel have really exponential growth, and what are the favorite ones that you have. So so I'll go ahead and kind of start, and I'll list one, and then I'll kind of go around to the table and maybe get start with Ben, since he's so I see his beautiful face here, and he was bright and early, and I know it's late his time. I think what time is it over there, Ben, for you in the UK?
It's 4 p.m. here, Bruce. It's not that late, but I'm actually sat outside the emergency room. My friend's gone in there now, so I thought I'm going to jump on. I'll happily start. Great question, by the way. Something that I hadn't thought about at all until you asked it yesterday, and I was like, man, I best get my act together. I need 3 stocks.
There you go. There you go. Is your friend okay, Ben?
Yeah, she's fine. She just needs to come down here and get checked out by the doctor. She's an elderly lady, and she just gave me a call and said, hey, I need to go to the emergency. So I said, cool, no problem. I've got a call. I'll wait outside. And she's in there now.
Well, hope my thoughts are with her, Ben. Hope she gets well. Thanks,
Bruce. Appreciated. And I'll tell her that as well.
Brother, why don't we start with you then, in case you have to go, in a hurry. So why don't we go ahead and start with you then?
Well, thanks a lot. Okay. Yeah, it was a great question, and I was thinking, what trends are occurring right now, and what trends are going to occur over the next 5 years that I would like to be a part of, and which stocks are going to give me access to those trends in the best possible way. So looking at strong companies, looking at companies with great financials underpinning them, thinking about if I was going to put large sums of money into those companies for the long term, would I feel comfortable in doing so? And I picked 3 from very different industries because they are progressive companies. And the first company that I looked at, and I really like this company, and the reason why I really like this company is because my former occupation was in IT hardware distribution. So I was very much into the semiconductor industry, very much knowledgeable about hard drives and storage. And this company is a storage company. And the reason why I've picked them, and I've actually mentioned them in the group before, the reason why I've picked them is because as the world evolves over the next 5 years, what we're going to need is we're going to need a lot more storage. And when I talk about storage, what I mean is in terms of, if you look at the gaming industry is going online, a lot of the stuff is hosted now. It's going to be downloadable content. You're not really looking at DVDs or CDs. That technology is becoming more and more obsolete. You look at social media, YouTube, the fact that we're storing more and more digital content online. Even on Zoom, as you're recording this now, this video will go to a cloud storage somewhere in a data center, and that will obviously get stored, and you can download that. You can upload to different servers, and all around the world, there's these places, like these big buildings, a little bit, I described them a little bit like Cyberdyne Systems in Terminator. You remember that film where they go in and you've got like this clean room, you've got all these servers there, you've got lights everywhere, you've got all these things. And the company that I've chosen is WDC. It's Western Digital. Now, Western Digital are not seen as the top leader in hard drive storage or SSD storage, which is solid state storage. But what they are is very much about high quality products. I think that their warranties are the best in the industry. They're very much focused on high capacity hard drives. I think when I was selling hard drives, we were talking about like 500 gigabyte, 1 terabyte, 250 gigabyte. Their top hard drive now is something like 16 gigabyte, maybe even 20 gigabyte now. So you can see the evolution over time. And I think when you think about Tesla, you think about EVs, you think about the direction that that's going in. They're going to be storing the maps, the autonomous driving. These are the basis of being able to do that. And I see Western Digital becoming like the next NVIDIA, or even where we look at semiconductor shortages. Potentially, we might have storage shortages. I remember when I was selling hard drives that one of the biggest things was getting the components to make these hard drives. So over the next 5 years, I think demand's going to increase. I think technology is going to evolve. I think every car is going to need hard drives or some form of storage. I think our mobile phones, and the way that the world is becoming more and more digital, even with cryptocurrency. I was listening to a conversation with Elon Musk and Jack Dorsey the other day. I really do believe that you could see Western Digital go from where they currently are right now, which is around 63. And I see that as a really good entry point, that they're about 63 USD. The price has come down a little bit over the course of the last few weeks. I could see them going to like 300-400, 5 times minimum, simply because it's like water, bread and water. You need them, and the world's going to need these components to actually continue its growth. So that's my first company.
Like it. It makes a lot of sense too, Ben. And you're right. It could be a nice little opportunity here. It's been in a little downward trend. But again, this is where you as a trader, as an investor, you have to go ahead and do multiple time frame analysis. You take a look at it on a longer term time frame. It's actually pulled down closer to the 200-day moving average. So it'll be interesting to see what it does over the next week or so. But I like the long-term story, and everything you say makes a lot of sense to it. So and that's really what I'm looking for, is something that's going to really change the future and the way we work and the way we live. A lot of times, I will say, a lot of times, and I've said it before, as traders, our whole business is all about timing. It's not enough to pick the right type of company. It's all about timing. As an investor, you have a lot more leniency on being able to get into a trade, start to build a position, and that sort of thing there. As a trader, sometimes it gets discouraging because you jump into a trade and it's like, oh, this thing's not working out. And there's a couple that come to mind where, I've traded and it didn't work out. But the biggest mistake you can make, if you've done your due diligence, like Ben, you've obviously have it with Western Digital. If you've done your due diligence and the company makes a lot of sense, you just have to know that maybe you didn't get the timing quite right, and to keep it on your watch list. And that's really what today's call is about really taking a look at these stocks. And that's why I said in one of the messages, it doesn't really matter if they're ready technically to go right now, but I'm looking for things for companies that really have, over the next 3, 4, or 5 years, have a huge potential for growth. And I think you stated a good case for Western Digital for sure.
Thanks a lot. Shall I go on with the next two? I'll keep them quick because I know that was something that I'm really passionate about, and I wanted to explain the reasons why. But the other two stocks that I've chosen are very much of a similar vein to that, which is progressive stocks, going to change the landscape of the world as we see it. The second stock that I've picked is Plug Power. I like Plug. I like the fact that it's a green energy play. I read recently that there was some major airlines that are looking to sign over to hydrogen-based power. The potential for that is huge. There's some other companies out there that are doing it, but I see Plug as the leader. And I think that when they first were launched, the price went up to something like 70 US. There was a lot of optimism, a lot of enthusiasm around it, and it's been driven down. There's been a few question marks around their financial reporting. I just really believe in that stock. I think it's the future. I think we could see with the infrastructure deal that Biden's putting in place, the fact that green energy, climate change, all these agendas are quite at the forefront of people's vision, that this could be something that really does become a market leader in the field, and I'd like to be involved in that stock because of that.
Like it. I like it. Very good.
Finally, the third stock is SRNE. It's a company called Sorrento Therapeutics. It's a play on medical. It's a biopharmaceutical company. They've got a lot of interest in treatments around certain conditions, oncology. They're looking at different areas, but one of the major reasons why I like this company, and it's a bit more short term, is because this company produces a 15-minute antigen test for COVID. So obviously, as these variants are flying around and everybody's reopening up, one of the strategies in the UK that they're trying to use to make it so we can continue with essential business is daily COVID testing. So like if you've got to go into a supermarket and you've got to load up the shelves, or you've got to unload the food and keep the supply going, instead of when you get this thing of, oh, you've been in contact with somebody who's tested positive for COVID, you must isolate for 14 days. What they're now saying is, you know, if you test in the morning, you look at that, you test negative, then you can continue to go around your daily business. And also this company, SRNE, have developed a treatment that's in trial right now, which is called COVID drops. I don't know too much about it. I just picked it up very quickly. But what it looks like is it's an actual treatment for COVID, and they're currently testing it. It's in phase 2 tests right now. I think this will be a much shorter term play than the other two that I've mentioned. But as the world starts to recover and people are trying to go about their daily lives, I think what we're looking for is companies like this that are supplying tests, that are putting treatments in place that are going to allow people to get back into what they do normally and get things rolling again.
Love it. Very, very good. Thank you, Ben. Anybody have any questions for Ben before we go on to the next person? Maybe I'll call Julia.
I do.
Yes, go ahead, Jerry.
Hi, Ben, could you spell out the second and third tickers?
So the ticker for plug is plug, PLUG, and the ticker for Sorrento is SRNE.
S as in Sam, RNE.
Yeah, Sierra Romeo November Echo.
Thank you.
You're very welcome, Jerry. My friend's just leaving the building now, so I'm going to help her to get into the car. Thanks, everybody. Appreciate you all.
All right, Ben.
Thank you, Ben.
I'll record and I'll upload it for you, buddy. All right. Jerry, you want to go next?
Sure, love to. Okay, so what I did was I started focusing on technology trends. This is my new method of growth for the future. Focusing on the technology trends, focusing on the 3 things: good technicals, a good company, and good sentiment, which I think is really important because the retail drives the market. So the type of technical trends that I'm focusing on are 5G, artificial intelligence, biotech, etc. And I've got about a dozen of them. But the 3 stocks that I chose, one is in the 5G, I call it the 5G boom. One is in the biotech, and specifically in personalized medicine. And the third is in consumer, basically the tech of consumers. So I'll just start with the first one, 5G. And this goes back to my prior life. I was a RF engineer for almost 30 years. And so I truly understand what's happening with the 4G versus 5G and upcoming 6G and what's happening. It's going to be huge. So I think any company that supports that whole initiative is going to be an interesting company to look at. And the one that I chose is GLW. It's Corning. For a few reasons. The first is that they are focusing on the infrastructure, which is the fiber optics. So they're a glass company. They're a long-standing company, probably 50-plus-year-old company. So they are ingrained. They're not going anywhere. And they do glass. They've always done glass, and they've changed their focus into fiber optics, which is glass. And how they fit into the 5G boom is that they will be supplying the fiber optic connections between the devices. And there's going to be a lot more devices. The difference between 4G and 5G is that 5G doesn't go as far, but it's a lot more powerful. So you're going to have a lot more devices, meaning a lot more connections. So I think there's a huge market for GLW. So it's a good company that checks off one of my boxes. The good sentiment is that they are just a historically strong company. And the good technicals, as I look at the chart, I'm seeing a nice pendant. It looks like there's a potential short squeeze indicated. The 8 EMA is just about to cross the 21 EMA. Their earnings are going to be on the 27th, just before open, so it's something near term that I can look at. And this is a stock that I would hold long term and continue to buy now and to continue buying. All right. And if there's no questions about that one, I'm going to go on to the next one.
Hey, Jerry, what exactly are they doing in the 5G space?
They're supplying the part that I'm mostly interested in is that they are improving the infrastructure of connecting the devices and the backbone.
Hmm. Do you know of any partnerships that they might have, like with Skyworks or anything like that?
I don't. I am going to continue researching into their spaces. I know they have several divisions that seem to be focused on 5G. So this is going to be, autonomous vehicles. If you imagine autonomous vehicles driving and needing to be connected to the 5G backbone as they're going from point A to point B. I'm envisioning a huge fiber optic framework.
Thank you, Jerry.
Yep. So the second one that I'm looking at is Boot, B-O-O-T. And I found this company when I was just scanning the stocks, just ran a scan, playing with different parameters on the scan to see what would pop up. And I came across Boot, and you wouldn't think that a Western apparel company would fit into my, technical trends list, but it jumped out at me. And so I gave it some more research, some due diligence. And it turns out that the CEO of this company just really caught my eye. Draws a salary below what I guess I go by the revenue of the company, and then the salary of the CEO should be in a certain framework within that, the revenue of the company. And the CEO is drawing below that, and it just seems to be incredibly, through all the pandemic and lockdowns and things, this apparel company continues to be profitable. And just a little statistics, the revenue has grown 5.7% over this past year. So that to me says, well, this company is doing something, you know, innovative in their space. And I think it has to do with online, number one, but also the sentiment of being, you know, down home country, family, you know, the good American feel is what they're focusing on. And I think that's important with what's happening right now in the country. So I like the company. That's check one. The technicals look good. The 8 has just crossed the 21. Their earnings are on the 29th. And again, it looks like there's going to be there's a lot of momentum built up in the chart. And the sentiment feels good. It just feels like a good company to me. So that's something I'm looking at.
Very good.
Okay. Sort of like a out of left field kind of it's a different kind of a stock, something that I wouldn't have expected to look at, but it caught my eye. And then the third stock that I'm looking at is B as in boy, D as in David, SI. And this is a biotech company. I've been reading a lot about something called CRISPR, and I don't really know what the letters stand for, the acronym stands for, but I do know that there's a huge attraction into what they're calling personalized medicine. And that's basically a model that it tailors the treatments and the medical decisions and things like that into for the patient itself, rather than like this one drug will take care of all these things. So this medical model takes into account not just genetics, not just environment, and not just lifestyle, but you know, everything. So and some of the techniques that they use are things like immunology and gene therapy. But there's something, I feel like there's something really big. I've been seeing a lot of things coming across my feed that have to do with this CRISPR thing. So I'm looking at the rumor, and that checks the sentiment. The three things: sentiments check. There's a rumor. I could feel it in the feed that's coming across my computer. I like the company. It's not a brand new company. It's been on the stock market for more than 3 months. So it's not just an IPO. And the technicals look pretty good. And now there's a lot of momentum built up. I'm not sure if it's going to pop high or pop low. So what I've done, I think in the long term, it's going to be a good company. But what I've done for the short term is I've placed a call and a short. So I forget what that's called, but it's like 20 cents, $20 at risk per option. I went with a September $4 call and a September $4 put. So all in all, for each contract, it's a $60 risk, of which I'm looking at the momentum that has built up, and I believe that that's going to be a good short-term profit. But I like the technology and I like the company. So no matter which way it goes, I think it's something that I'm going to be looking at investing in for long term.
Very good. Excellent, Jerry. Anybody have any questions for
Thank
Jerry?
you.
All
And I
right.
apologize about my camera and something is wrong with my laptop. I tried to turn on my camera, but it's not working. My microphone is not working. I think I need a new laptop. So, but it's good to see your face.
Thanks, Jerry. Thanks. All right, let's
Okay.
go to Kaylin then, if you're ready.
I am ready, but those are hard to beat. They're to go after. But that's good. I'm ready.
Good. Well, the whole thing is to get really ideas on, to kind of brainstorm and get ideas. I mean, I had a hard time kind of narrowing my list down, but that's the whole thing, is to really just kind of think about what if you had to really put the bulk of your money into one or two stocks, what would they be? And this doesn't mean you're going to buy and hold, because that's not what I do. I actively manage, but I want to be able to ride some of these stocks as far as as far as I can, knowing that they are good, strong, fundamentally sound stocks. So that's really the purpose of today. So Kaylin, go ahead.
Yeah, so my three are, two of them are very familiar with everybody based on everything I've been hearing. Um, Roblox. That's kind of like a sore thumb just because we've had house guests and there were three young boys and they got in trouble with their parents because the 8-year-old got into the Apple account and started buying. And I think I may have mentioned that you mentioned your daughter, you had to take away her iPad.
I
So
do. I mean, it's really it's an issue. It's like a drug for them. And my kids are very disciplined. I mean, they do martial arts. Matter of fact, in an hour and a half, I got to take my younger daughter to jujitsu. But they are, but particularly the oldest one, she's 10. I would say she's like addicted to that. I tell her that, I say, Kathy, you're like becoming addicted to this. And, all her friends are playing it and stuff. So I got to really monitor that. So when you talk about Roblox, I mean, that's definitely a stock that I think has
Yeah.
legs to it. I think it's people are only going to get more and more involved in games like this, for sure.
And I know that I haven't learned everything, but with that particular stock, I bought it and I'm holding it in the interim
Mm-hmm.
because I see and I'm hearing things about Roblox and that it is very addicting. This boy is 8 years old, and I'm not kidding when I said he ran up $1,000. So that got me thinking. So maybe there's something to that. So I started, um, looking into the company and seeing why it's so addictive and why I should be a part of that.
Yeah.
So that's one.
Yeah,
Uh,
but I definitely think, before you go on to the next one, I definitely think that's a mega trend, and that's what I like to look for. People always say, "Where do you get your ideas from?" And I think Ben started off in saying, looking out into the future, and that's what you have to do, is take a look and say, where are we going as a society? What are things that are changing? I mean, that's how I came up with FOUR, right? FOUR. I'll talk about that in a bit, but I mean, it's stuff that I think it's a sustainable trend. It's only going to get stronger, and I think Roblox is definitely on my list of companies to invest. I wouldn't mind holding it. I just can't bring myself to hold any one company, but it's definitely a good, strong company with the bright future, I believe.
so the ones that I'm listing today, it looks as if my pattern has been that I'm holding on to these three because
Yep.
I see something there. The second one that we've talked, and I've heard conversations on this in the group, is Wish. I know of Wish from when my daughter was in high school. She's now 29 years old and she still buys from Wish. So I know there's something there. And I feel like a lot of times you got to pay attention to where you're putting your money.
Yep.
And
Yep.
that's what your focus is going to be. So I'm not too technical as yet about
Yep.
why, but I know how I feel and why I'm running with these in particular.
I think by the end of the year, we see north of $20 on Wish. I really believe that. I know we only have, what is this? This is the end of July. We have 6 months left, but I believe that Wish goes north of 20 before we hit 2022. This is a company I personally believe, and it's on my list, that you could buy and hold the stock. You can buy and hold this. I have traded the option as well, because there's very little extrinsic value in there. But if you were just an investor, I would say you could buy and hold this company, and close your eyes over the next 5 years, and this is going to be in the triple digits. I'm a big believer of that. You take a look at e-commerce, you look at people say, oh, they buy junk, but you gotta keep in mind, Wish doesn't manufacture the junk. Wish goes ahead and is the platform for the stuff, so they could pivot any time. And then they just brought on board their senior director from Google. I think this company has a bright future. They're in the right space. E-commerce is only going to get stronger, and people are migrating toward that. And you take a look at Wish and on the downloadable apps for shoppers, it ranks among the top 5 for the downloadable apps for that. And again, I compare it to the dollar store, the general store, both multi-billion-dollar businesses. Wish has a bright future, and those that don't believe in it, I think they're going to turn around, blink their eyes, and say, "Oh my gosh, I wish I had bought Wish."
Right. So, and then my third one is one, and I'd like to hear your thoughts on this one. It's called NLST. I remember I brought it up in the chat, and you said don't chase it. I'd like to know what you mean by that. Don't chase it. That's one that I bought, and I'm holding that one, and that's just based on it has a patent. That's the one with the patent lawsuits out. So I'm curious to see where that goes as well.
Mm-hmm. So before I go with the explain what I meant by that, can you tell us a little bit about what does NetList do?
They do patents, and I believe I did the research, and I don't have it in front of me right now, but I know that they have these lawsuits out. Let me see if I can pull it up again really quick. It's been about 3 weeks since I looked into it and had and I started looking at it when it was $3.90. And there was an article that I was reading. Let's see, lawsuits. They had lawsuits out, and I believe it was against Google and some other big name industries or big name companies. They manufacture, I guess, the memory systems. Shit, I gotta do some more. I forgot the reason why I got into it, but that's one of them that I just looked at it and then looked away.
Mm-hmm.
But
Yeah, I'd like to know, maybe you get a chance, I'd like to know a little bit more about what they do.
I'm gonna do the research and then put it in the chat.
No problem. At what point did you, I can't remember, what point did you tell me, or you put it in the group, you said, hey, look, what do you think about NLST? Where was it here? Was it?
It was, I have it marked on my board here. It was $3.90 at the time. And there was an article that I was reading about patent litigations.
Mm-hmm.
And I just thought it was interesting because they had some other big names that they were going up against. Let me see if I can find it really quick. And I thought at $3.90, it has and some litigations that can run a very long time. And it is earmarked to win the next 3 lawsuits. So because of that, I thought, well, maybe I should look at that one and see what it meant. So then I said, what do you think about this?
Mm-hmm.
And then
Technically, when I take a look at a stock technically, and they start to make this spike of a move, you got to know why what's causing that move. Is it something that's really going to be sustainable, or is it people that are, is it just emotion, a little bit of FOMO that's driving that up? So not knowing why, that's why I say, hey, don't chase the stock. If you know the reason why, and it might be a little bit of a different story, you start buying into it. But when a stock starts making a move from here, from these, what is it, the low $2, and it starts spiking up here to, $4 a share and it starts moving, you got to be really careful with those things. You could get burnt on a stock like that if you don't know really the reason behind the movement.
I'm gonna do some more research because I did it at the beginning, and I just gotta go back and follow up
Okay.
as to why. But I'll look into it tomorrow. So those are my three.
Sounds good, Kaylin.
Thank
Very
you.
good. Anybody have any questions for Kaylin before we go on to the lovely Megan Dorn? All right. Thank you, Kaylin. Appreciate it. Megan, you're up.
I've got a couple on my list, or the three, I guess. Uber is number one. I think that it's super undervalued for where it's at. I didn't look at the charts at all, but they're getting into the freight industry. They're getting into autonomous vehicles, which will reduce their cost. They have almost enough capital to pay off all of their debt. And I love that in a company. I think it's a good foundation. Had the COVID not happened last year, I think they would have had enough cash. And even with COVID in 2020, their revenue was still higher than it was in 2018. So it was just a blip down from 2019, the previous year. So I think revenue wise, they're doing good, enough capital to pay off their debt. They're getting into other industries such as autonomous vehicles, the EV space, the freight industry. So they're branching out and they're growing. And I just think the price per share is really undervalued for what they're going to do in the next five years or so.
Yeah, I want to see. I'm looking at the chart now, Megan. I've actually been waiting for Uber for the right moment. This might be it. I mean, it's down there. The reward to risk looks pretty solid. So I had drawn my lines. This is what I always talk about too, is plan out your trade ahead of time, guys. Start to mark up your charts, draw those lines. So this is a very key pivot point right here, this 47.23 area, and we're trading at 47.46. So I'm going to take a look at this on Monday to see if it holds this area. If it's holding above the 47.23, I'm going to take a bite of the apple with you and go for it. I like the story behind Uber. A lot of cash on hand right now, and I do like the fact that they're starting to expand their operations. So, and when you take a look at a company that really owns no vehicles but operates and collects that revenue, that's a strong way to go ahead and run a business.
Yeah, and I look at, so COVID hit them because they weren't driving as much, but they don't have all that overhead. It's like, so what? We're just down in revenue. We don't have all these expenses we're still paying. So I look at Uber as something I would throw in my kids' accounts and write some covered calls against to reduce my basis and just let it ride for a few years. And then in my active account, I'll watch the charts and actively trade it.
Yeah, I like it. I agree with you. I do like that. So we'll take a look at that on Monday, Megan, and see if it holds that area. If it does, could be nice, nice little shot there.
Okay. So my next one is probably controversial considering the link I sent out this week about the China crackdown, but I like Baba. Alibaba is, I looked at the financials and it looked like it did more in revenue than Amazon last year. And I look at the price point of Amazon is ridiculous compared to Baba, but yet Baba did more in revenue. Baba has enough money to pay off all of their debt. Not only are they an e-commerce space like Amazon, but they're in the cloud space, which in China isn't as developed as it is here yet in the cloud space, but it's growing immensely. And Baba takes up 40% of the cloud space in China. So I think that they are completely undervalued. I think they're going to grow. I think that this China crackdown just gave me a discounted price. So again, with Baba, I would look at putting this in my kids' accounts, writing some covered calls to reduce my basis, and then actively trading it based on the charts in my active account.
Yep. Keep in mind though, I mean, watch it over the next day or two to see if it continues this downward. I mean, you take a look at the trend, it's on a downward trend. Just took a look at the 3-year chart. This looks like the 200-day moving average on the long-term 3-year chart at 199.16. So that's something I'd watch for that area to see if it migrates back down to the 199, $200 area, and see what it does and how it behaves at that area there. That might be your entry point.
Yeah, and I think I'm not going to do anything today. It's kind of on my list of a long-term play because of this news that came out with the China crackdown last week. It's
Mhm.
causing a lot of volatility in all of these stocks. So I do want to watch it a little bit, but I think long-term, Baba's going to recover and grow.
I agree. Yep. Very good.
All right, my next one is a little bit of a play in the mud. It is a personalized medicine. Ticker symbol is C as in Charlie, F as in Frank, M as in Mary, S as in Sam, CFMS. And I picked this one because it is that personalized medicine. What they do is personalized joint replacement. So I think that as we get medical advances and our bodies are living longer, things need to be replaced. But instead of just a cookie cutter replacement, they work on personalized joint replacement. And they did get a exclusive contract in China as well for their hospitals and such. So I think that that's awesome that it's exclusive. Again, it's a little bit of a play in the mud because, you know, looking at the price point, it's very cheap. It's newer, it's, you know, whatever. But I think that long term, I could see this going somewhere with that personalized medicine and that exclusive contract.
And Megan, is this a fairly new company, or they've been around for a while?
That I don't recall off the top of my head. My internet service to do the research has been very, very spotty.
Mhm. No
Let me
worries.
see
I'll,
here.
I'll take a deeper look into this. I do like that. I agree with that. As you do get older, I mean, I never thought that I'd be aching some days that I the way I ache. So I might need to take a look
Yeah, I
at
mean,
those stories and
my dad is a black belt, and so he's in his 60s and he still does the splits every single day and works out really hard every day and loves martial arts. And he was so frustrated because he needed a hip replacement on one side and now the other one needs to be done. And he's like, I work out every day of my life. I eat vegetables for lunch. I do everything right. I don't smoke, whatever. And it's like, he actually worked out so hard that he wore down his joints and had to have that replaced. So I feel like you're damned if you do, you're damned if you don't, right? You don't work out, you do work out. Either way, our bodies are going to wear out. And they say the personalized replacements will last longer and be better for us than just kind of the cookie cutter way it used to be.
Yeah. You know, technically, I like the story behind it. I really do. I wrote that one down as well. You know, and it makes sense. Technically, it does look like a very bullish pattern right there. So you see like a rounded bottom, and you also see an inverse head and shoulders.
Yeah, I actually own yeah, and I did buy this a couple days ago, and I've been enjoying the run up on my shares.
Yeah, yep, I bet. And if you take a look at it, that's why I always say you guys go do a multiple time frame analysis, and it gives you a different view. It looks like that movement is just getting started, you know.
Looks like a cup and handle.
Yep.
Yeah, it's very nice, strong pattern. The story is good. I like the story. You know, I wouldn't mind getting into that and holding it just long term too. Very good. Anybody have any questions for Megan?
Yeah, that's what I did. I've got one account that I just buy.
Go ahead, Megan.
Oh, I just said I've got one account that I've got my speculative play in the mud, and I just buy shares and hold it in there and don't look at them. So this is one of them I got in there.
Yeah, makes sense. Very good. Excellent. All right, let's go on to Mr. Mike Rockman. You're up, buddy.
Hey guys, how you doing?
Great, Mike. Good to have you here, buddy.
Yeah, good to be here too. So I kind of picked 3 stocks that I'm looking at, not really thinking kind of, you know, where I think we're going to go as a society, maybe a little bit, but not necessarily putting all my money in, but just some ideas that I'm kind of looking at. So so my background is I've been working in financial services, particular payment processing for about 15 years. So I'm really very familiar with the space. So so payment processing is kind of what Square does. You know, Visa, MasterCard are the rails of everything that happens. So I know you mentioned 4. So, you know, Shift4 is a payment gateway. But anyhow, on that stream, one company that I've been really paying attention to is a company called PaySafe, PSFE. And so PaySafe is they're a payments provider, but they do a lot of interesting things. They're I think the global leader in the processing for iGaming. So anything that has to do with online gambling. So anything from, you know, they power the payments for DraftKings, they power for, you know, Caesars Casino, for a lot of the big, they have pretty much 75% of the market worldwide of gaming, and they process it. So that's kind of one big part of their business. And the play here is, one of the parts of it is that as gaming, online gaming gets legalized across the United States, this is a big play. The other segment they play in is travel and entertainment. So they process a lot of, which is being pounded right now, but so it's almost a reopen play as well, because they do a lot of payment processing for the travel industry. They also they have a crypto piece where they have something called eCash, and it's a wallet where it allows people to convert cash almost instantaneously into different cryptos. So it has that piece. You know, then on top of that, it's also an integrated payment provider. So it does everything from you know, point of sale transactions to as well online e-commerce. So there's that other layer in there as well. So there's a lot of there's a bunch of other things. They do digital goods. So they do a lot of the digital good processing for like Roblox, for Fortnite, for Google, for Spotify, PlayStation, Facebook, Twitch, EA. So there's a lot of different things. So it's a company that I've known for a lot of years, but it was a special a SPAC stock. So Bill Foley picked it up. I think it went public in March, and the thing is just getting pounded.
What's causing this stock to? That's what I was going to say. What's causing the stock to take a nosedive since the beginning of the year?
So I think what happened is they did their first earnings report, and they had a miss right out of the gate. And the explanation, I you know, I've been kind of digging in deep and going on to the calls and whatnot. They had an earnings miss, and they attributed that to writing off some business, essentially cleaning up their risk profile on the book so that they're better positioned going forward. Because what I think they process a lot for some high risk merchants. So people in like multi-level marketing is one, and I think some kind of nefarious areas of the internet. So they're just trying to cut those out, take the write downs now to position themselves for growth. So there's no question that I think long term this stock is going to be a real winner, just because of those different markets that they play in, and being you know, I know some people who work for this company, and I know it's a quality company. I just really feel like it's getting beat down. I've been you know, I've been playing the options on this one, but with like a 6-month outlook, so out till January. So I've been kind of taking a bit of a beating, but I'm holding on here. So that's a lot of what I think of this. So Bruce, what do you think of this technically?
Technically, yeah, I mean, so it's in a strong downward trend. Is it going to start rebounding? Don't know. I mean, if I were to take a look at this and say, hey, I'm going to roll the dice and get into it, I would put a very tight stop on it personally. You know, if you're an investor in it, it might be a little bit of a different story. It's just not my personality to, even stocks that I really like, to just buy and ride all the way down. I mean, the ride has been from what was it, $19-20 a share down to, so it's been sliced in half, really. You know, I'd have to put a line in the sand where, you know, this would be like my line if I were to jump in that, which I won't, just because I think there's other choices that are better technically.
Yeah.
And you know, and you mentioned four is a much, to me, is a stronger stock. The technicals on it are very different than this one. They're actually the opposite. So yeah, I'm just not a big fan. You know,
so yeah, and I think there's an earnings, their second quarter earnings are coming out on August 16th. So I think there's a story that could potentially change there if they come out and they turn things around. I think this thing has a long-term potential. I'm pretty sure that in 5 or 10 years from now, this will be worth a lot of money.
Right.
Um,
And that's the whole thing too. I mean, all the things you said about, with DraftKings and everything. I mean, I couldn't get my mind around why. So why is it taking a move to the downside? Is it poor management? That's the first thing that comes to my mind. Is the company not managed correctly? Because it looks like they're doing a lot of the right things. I don't know. But this is, I think, I say it over and over again, our business is all about timing.
Yeah.
Maybe this is the time to start taking a look at it and eyeballing it. Maybe this is the time to, be able to go ahead and say, hey, if it holds these areas here, I'll consider getting into it. I mean, you're already in it, but I mean, for someone that's sitting on the sidelines, this might be the time to start taking a look at this trade. But I'd have to do more research on it and see, well, how does it compare to the stocks like other payment processors like Square or Four, that sort of thing there.
Yeah, and I think it's more of a niche long-term play. So I know that there's about a 60% institutional ownership, and that I don't know if it's being forced down so people can buy it cheaper. That's kind of one idea.
Mm-hmm.
Because it's when you look at the 13F filings, there's a lot of big companies buying chunks of this thing. So,
Yeah, I mean, it's still like, on the 4-hour chart, it's under my 200-day moving average. On the yearly chart, it's under the 200-day moving average. I put on a three-year chart. It just broke under the 200-day moving average.
So that's one thing. Like, this thing went public March 31st. So I think the run up there was when it was a Bill Foley SPAC stock or special acquisition company, right? And then once they went public, so I don't know, like, do you consider it from when the SPAC was established or from when, it became PaySafe?
When the announcement, really when the announcement happened. I mean, that's the other thing too. You're so early on this stock. It's the thing with doing, IPOs or SPACs. You really got to watch them shake out. We saw that with Clove, and other ones. I mean,
Right.
I'm not saying I don't invest in SPACs, because I do, and IPOs. I mean, I just did yesterday, and I'll talk about that. But I mean, you got to be careful with those things. You really do.
Awesome. Okay. So yeah, that's kind of one that I'm looking at. Another one that I'm looking at is Match Group, MTCH. So they're pretty much the online dating world. And if we look at ourselves as a society where we're going moving forward, a lot of people are making those connections online, meeting people online. So this company owns, Tinder, it owns Match, OkCupid, Plenty of Fish. So they have pretty much the market cornered for these online dating. And I think that long-term as a society, this becomes less of a taboo of meeting people online. And so there's that social side of it.
Can I just interrupt for just a second? I don't think Ben realizes his camera's on. Thank you.
Yeah.
So that's kind of one that I think long term has some pretty interesting prospects to grow here. So I haven't done a whole breakdown of the analysis of the stock, but from what I'm seeing, I think it has some pretty good legs.
Okay.
And then another one that I have that I've been looking at is Chewy, CHWY.
Mm-hmm.
They play in the pet space. Essentially, they have a recurring billing revenue model where they sell dog food to your house, and they're getting into all different aspects of dealing with pets.
Yeah, technically, I like it. I mean, everyone loves their pets, right?
Well, yeah, and so the bigger story here is everyone's kind of gotten a dog over COVID, or some sort of pet, and pets they have like a 10-year lifespan, some of them, and it can get very expensive. I'm dealing with an elderly dog right now, and every second week we're going to the vet.
Wow.
So so there's an emotional play there. So yeah, I think kind of between those three, the payments, the online kind of social interaction, and then the pet thing.
Yep.
So,
I like it. I like it. Sounds good. Thanks, Mike. Appreciate it.
no worries.
And I think we have Julia. That brings us to Julia. Are you there, Julia?
Yes, I'm here.
Okay. I wasn't sure.
So my three top stocks, I think everyone would know, and that's the stocks that. Wait, just a minute. I'll be over. I'll bring it over there. I'm sorry. Yeah. So it's Amazon. It's the technology cloud stocks. I use it every day to order books, audio, everything from there. So I can see myself. Well, let me list all three of them. NVIDIA semiconductors. They create chips and graphics. Recently, it's exploded because crypto took off, and I got SQ. I put SQ on a watch list. It's the financial sector. Business use that to pay for clients to pay for buying products, and so maybe fall I will replace that with fall in the future. And so the reason why I pick those stocks because I use it every day and I like it, and I can picture myself using it in the future, and people use it every day as well. And it's good for it's okay to hold, buy and hold, and it will eventually go up. And I try to pick like one top stock from each sector. So whenever they say, "Oh, this sector is going up," then I have in mind what stock, and then I know they're low price, high price, and I will buy it. And
Yeah, you pick good stocks. I mean, NVIDIA is really for me. NVIDIA has always been a cryptocurrency play. You know, so there's some good. You guys got to excuse my I think it's my 2-year-old that's crying in the background. I can't remember anymore. Most people got dogs during COVID. We got kids. So at any rate, NVIDIA is a good, I think a good play for cryptocurrency and a lot of other things too. So it's a good, strong play. I mean, all the stocks you mentioned, Square is another great stock for, I think it's just going to continue trumping higher. That's really where the future is going. And then of course, Amazon is, you know, a big play there for a lot of things online. I find myself going to Amazon for everything, you know, to order. I just bought my daughter, my 4-year-old daughter, she does jujitsu, and I bought her a dummy. They got at least 4 feet dummy, and I just got it yesterday, but I got that through Amazon. So kind of cool stuff. So good plays there, Julia. So let me talk about a little bit about some of the plays, and I had a hard time going through and really deciding which ones that I really liked as my narrow it down to the top 3. I'm going to start with the one that Ben had mentioned, or someone had mentioned it earlier on the call, and this I got this idea from really, I didn't even know about the company until I started doing research, and I always try to pay attention to, you know, habits. Try to pay attention to things that are new, that are kind of cool, and that I feel are changing the way we'll live. And I was at a restaurant one time, and I got the bill and the check, and instead of calling for the waiter, I saw on the thing it said, "Hey, scan your phone with this QR code, and you can go ahead and pay the bill online." And I thought, wow, that's kind of cool. So I got my phone and I scanned it, you know, and paid the bill online, and didn't ever have to call over the server. And after the 3rd time that it happened, going to 3 different restaurants, I thought, who's making this technology? And that's where I came up with Four, F-O-U-R. So it's very, very much like what Mike had talked about with his, what was the stock that it was, PSFE, very much like Square, but it's really specialized in different things, and those QR codes are one of them. And a lot of the investors that have invested in the company, I just like where the movement of the company is going. I like the trend of the company. I like the fact that we recently had a pullback, and right when it pulled back to this area here of $83 a share, I went ahead and jumped in it. And I think this stock continues to go higher. If I had to, and I try to think in light of, if I had to pick one stock to put all my money in, what would it be? This would be one of the top stocks in my list, is Four. I really think this stock goes well over 100. I try to find something that was negative about the company. I couldn't find it. So FOUR, I think, is one of my top picks. Another one that I wanted to talk about is I started taking a look at a stock that was recently up and coming. They've been around for a while. Before they even went public, they're already profitable. So I like that. That's always a big bonus. I looked at what they were doing, and they specialize in the gene editing space. And I think with the light of COVID and trying to go ahead and stay healthy and everything else, a lot of focus has been put on gene editing. So I started going back and taking a look at CRSP, and I said, okay, this company is a company that's at $122 a share. If you go back and you take a look at where the company started, it was right about $22 a share. And now we're at, at one point it was over $200 a share. Now it's pulled back down some, but it's still at about $122 a share. I did the same thing with another company, another gene editing company called Beam, BEAM. And I saw, where did this company start at? Well, it started down here at the low teens, right? $13 a share, and has pulled up as high as $138 a share, has now pulled back a little bit to about $92 a share, but it all started from $13 a share. Then I took a look at another company in that same space called Edit. And I looked at where that company started, and it was also in the low teens, $14 a share. And it moved up as high as $99 a share, and has now pulled back a little bit since to about $40 a share. So all those companies, and there was one other one, was NTLA. So the same thing here. This company was around $9 a share, and then it pulled up to over $200 a share, and now has since pulled back to about $137 a share. So I try to take a look at all these different trends. I take a look at, when you're looking at a company that you're going to invest in, I like to take a look at, there's no better story that gets told than by taking a look at the sister companies. So I take a look at, so for example, if you're looking at McDonald's, you should be taking a look at Wendy's and Taco Bell and these other things. So I do a lot of that same stuff with every stock that I take a look at. So when I started taking a look at the stock that I wanted to invest in before it went IPO, I thought, let me take a look at these other sister companies and see where they were before when they started out, and what they did, and where have they come. So Megan had kind of made a comment. She said, hey, technically, I'm not really keen on where they are right now, and I get that. I wasn't really keen on them either in terms of where they are right now, but I was looking more long term in terms of what is the potential of where this company is going to be starting and where they're going to be going. And that's where I came up with, and also this company here that I'm about to show, I put an article out there in the group. It's Nobel Prize winning material. You go back and you take a look at it. Solid leadership team. And with all that, and with all where like what I said, the industry is going and where we are going as a society, I thought to myself, this is something that I would not mind buying and holding long term. So this is a company called Caribou. Its ticker symbol is CRBU. I've already started a position in it, and I will continue to add to this position. I don't think I will sell this position. I don't think, when you say, hey, do you have a stop on it? Right now, I don't. I haven't really decided, on that stop. If things get crazy and it really starts to break down, I may step to the sidelines. I don't know. This is a company that I really want to hold. I don't think I'll let it go past like $12 a share, but I've just started building my position on it. I don't think it's going to pull down that far, but you don't know because it just IPO'd on Friday. So anything could happen, but I'm basing it on the fundamentals of the company, the revenue that they've generated, the Nobel Prize team that they have in place, and the fact that all the companies in this space started in the teens, the $13, $14 a share, $9 a share, and they've all ran up to triple digits. So this is something that I think longer term, I don't know how long, I don't know when, but I think longer term, it might happen sooner than I think. I think this stock will join the rest of its peers in becoming a triple digit stock. So right now it's trading for $16.32. You saw that it ran up to 1968, pulled back, ran up a little bit, and then it closed out at 16 at where it's at right now, 1632. So that's something that's on my list as well. CRBU. So many stocks, so many really stocks to really choose from. It's hard, but 4 is one of them. This is another one. The next one that I'm going to bring up plays into really the EV space. And, last year EV was all the rave. And I think with the current administration, this is even going to get stronger. You already seen some legislation come down that where a lot of companies are saying, hey, we're moving. We're not going to produce, gas engines anymore. It's all going to be EV. And then with Biden coming out and saying that he wants the government fleet of vehicles to be able to be all 100% electric vehicles, that kind of sparked another interest and me doing research on taking a look at, well, who produces like delivery vans? Because that's what a lot of the government vehicles are. They're not cars. Most of them are delivery vans. Who produces those delivery vans, like for the Postal Service and for UPS and a lot of the government vehicles that are out there? Who produces those? And it was hard to go back and take a look, but I started taking a look. There was 3 companies that came up. 2 of them were not American companies. One of them was went ahead and manufactured for their delivery vans combustible engines, which is not part of the agenda. The agenda is really to make it all electric vehicles. And then this one company that stood out that I think has a big chance to really go far is Workhorse, WKHS. And the other thing I like about Workhorse, so again, it's all about timing. So I got into the trade, it broke out, I stepped out of the trade. I haven't stepped back into it yet. I've gone in, I think one other time, I stopped out for a small loss, but I'm watching it right now to see where is this thing going to start to baseline, because at some point it's going to start to baseline and start to move back up. So this right here, this 1067 area, we're very close to that right now, is what I'm waiting for. So I'm waiting to go into next week to see what exactly does it do. Right now, the technicals are showing a downward trend. You can see that here, the 8 and the 21 are moving down, but I'm waiting for it to kind of baseline and start to move back up. So I like it for a lot of different reasons. Technically, I like the fact that it has been pushed back down because I think this gives us a great buying opportunity. I like that fact. I like the fact that the long-term landscape is in favor of a company like Workhorse, the only American company to really produce all electric delivery vans. So I like that. And I like the fact that if you go back and you take a look at FinViz and you look at the short interest, it's high. It's high. So it's somewhere around 34-35%. So at some point, and I'm not really sure where that trigger point is, at some point it's going to reach a trigger point where the shorts are going to get badly squeezed. And I want to be part of that, that squeeze. So I will wait to see on next week to see how we hold up, but I have my line in my sand right here, this backdrop at about 1067. And right now we're at 1079. So if we can kind of consolidate and it looks like we're going to hold it at this area here and we start to curl back up, that's when I'll go ahead and I'll jump back into the trade. So that's my third one there. And I think the other one that I had in play that Kaylin had already mentioned was Wish. Big believer in Wish for all the reasons that I said earlier. I just think that's a stock that you can buy and hold and will do very well for you. So any questions there, guys, in terms of what anyone had brought up on the call?
I have a question that isn't related directly to any of the stocks, but so I'll wait until other people, but don't forget me, okay?
You got it, Jerry. Anybody have any calls, or I'll go ahead and let Jerry go. Jerry, you're up.
Okay, so in a big picture of what's happening in the overall economy, you know, the Fibonacci is what I think three levels of a 5, and the issues that are happening with banking, tightening, you know, tightening the monetary supply and things. How do you see that playing into how you're going to enter some of these trades? Are you going in at at a low, just tiptoeing in, or you tell me.
It really depends. I mean, for me, I usually scale into trades. If it's a situation like, let's say like workhorse, where it looks, let's just say, next week, this trade doesn't tip down to the 1067 area, or it starts to curl back up, and it looks like it's starting to consolidate. I will go in heavy because, the reason for that is, my uncle point, my stop loss area is very, very tight. It's at 1060, it's at the 1067 area. And that's why I play all my trades. If it looks like my risk is that my entry point is very, very close to where my stop loss is going to be, I'll take a heavier position on the trade. If it looks like I'm going to enter a trade where maybe I'm a little bit more liberal with my stop loss, then I'm going to scale into the trade. Does that make sense, Jerry?
Yeah, but on a bigger picture with what's happening in the overall economy is what I guess my question is. And it sounds to me like that isn't even in your mind's eye. You're just focusing on your individual stop losses.
Yeah.
Is that true?
I hedge a lot. So, you'll typically find that I use puts a lot for my portfolio. A lot of them expire where I lose on them. And that's what I want to do, is I want to lose on those puts. There's times like last week where I made a lot of money on my puts. So I'm usually hedging my portfolio if I feel a little bit nervous about the market, which right now I really don't. There's nothing in the market that tells me that we're going to have another pullback anytime soon. But if I was a little bit nervous, it's something like in this area here, what causes me to go ahead and put puts on is when I start seeing areas like the SPX or the Dow Jones start to show signs of weakness, big red candlesticks, start to move in the other direction. That's when I'll go ahead and say, you know what, I'm going to start scaling out of my long positions and starting to put more short positions on. Right now, I don't feel that in this environment. And I think longer term going forward, I think the stocks that will fare very well going forward are going to be, you have to think about what's the economy going to be looking for? Efficiencies. And where do you get efficiencies from? Technology, AI, things of that nature there. So those are the type of stocks that I'll be looking for. I'll be looking to going forward. I won't be looking for really, consumer staples or the safety stocks. That's just not how if I were to do that, I'll just swing the other way and trade the market to the downside. I'm looking for trades that I think have huge potential to improve the economy by efficiencies. And that comes from really technology plays.
Okay, so even though you're right now, when you think the economy, it seems to you that the economy is, or the market is going to be continuing upward, you're going to be investing in these stocks that we were discussing today, these kind of stocks. But if you see a downturn with some heavy red candles, like has happened, like you were just showing, you might scale out of even those stocks.
It depends. I mean, like for my kids' accounts, I have like stocks like Wish in there. I just believe that's a stock that a company with a huge bright future, and it's, in my opinion, so undervalued. So if it stocks like that, I don't really trade. Someone mentioned earlier, one of the other people in the group mentioned about what are some of the lower price stocks, and I mentioned like WWII. That's a stock I don't trade that stock. I invested in it.
Right.
Got it at a very low price, and I believe this stock easily will go to, at least over the next 5 years, I think $3 to $5 a share. That'll be a huge return for me. Not a 10x, but a 100x return. So it doesn't take a lot of money. It doesn't take a lot of investment to really make a lot of money with those. So there's certain stocks that I'll take on that I just what was the other one that I did for lithium? And I haven't looked at it for a while. BMX. BMX is another one. So there's some stocks I just invest in. I hold it. I believe in where they're going, and I don't do anything with them. So I would say, and it depends on the portfolio that you're trading to. For me, Wish is one of those stocks that I'm just buying and holding, like for my kids' account. For my own account, I'm very active with Wish. You know, I go in and out of it.
Got it. Yep, that sounds good. Thank you, Bruce.
You got it. It all comes down to personal flavor. It depends on what account you're trading, what your goals are. You know, there's some accounts that I'll have set up for myself where, and there's some stocks that just make that's on that criteria that I don't even worry about. I just invest in them. I'm going to hold it long term. There's other accounts and other stocks that I will actively trade. So again, it goes back to what I've seen a lot of the conversation in the group. You got to kind of find your own way and what your own style is, and that's where you start to find success in trading. Anybody else have any other questions?
Yeah, on that note, I'm what, 8 years in now? Has it been 8 years?
Yeah.
Almost 10 maybe since we met.
Yeah.
I still feel as if I am searching for that sweet spot that makes me, you know, my style. So I'm getting a lot closer, but you know, sometimes I still tiptoe out of my comfort range to see if I might have a better luck at, you know, doing it a different way. And yeah, so
Yeah,
it takes
that's
a
why
long
Jerry,
time.
Yeah, that's why, Jerry, you know, you have to know why you're trading. You know, there's certain accounts I trade for cash flow. I live off of the market. So there's accounts that I'll trade for cash flow. There's other accounts that I'm not trading for cash flow. I'm trading for a longer term growth. So you have to know why you're trading and what that purpose is. You know, I've had some students of mine that, well, one guy still does this. He lives in Vallejo, and all he does is he picks 3 stocks. At the very beginning of the year, he'll pick 3 stocks that he really believes in. If they're optionable, which most of his are, he'll buy leaps on them. He'll buy those leaps. You know, if they meet all his criteria from a fundamental standpoint, from a technical standpoint, when he's getting started, he'll buy those leaps, and he never trades them throughout the year. And then at the end of the year, he closes them out. You know, everybody has their own style. I couldn't do that, but I do something similar, but on a shorter time frame with them. So you do have to find your own way on what works for you. It's really the importance, going back to keeping a journal, not just of what your trades are, but really going back in what type of trade did you do that really produced great results for you. And then you start to find out, wow, doing these type of trades, these are the ones that produce the greatest results for me. I'm going to continue doing these type of trades. So you'll find that out. But you got to keep a journal, and you got to track the type of trade that you're doing. And that's how, for me, that's how I came up with going longer term on my trades, because that works for me. I go out 4 or 5 months on a trade, even if I'm only holding it for 3 or 4 days. People say, why? That works for me.
Got it.
Hey Bruce, what's a leap option?
Yeah, so leaps are long equity anticipation plays. Those are a leap really technically is anything that has an expiration date of 7 months or more is considered leap.
So maybe I'm leaping on PaySafe.
Yeah, I mean, if you have something that's going to expire in more than 7 months, that's a leap.
Okay.
Anybody else? No?
I was gonna say, I'm still trying to find my legs, but after what Jerry said, that, you know, kind of calmed me down a little bit, that it's okay to move at this pace.
Yeah, it really is. It really is, Kaylin. I mean, what's going to help you? I'm telling you, I say it a lot, but you know, some people will go ahead and take notes. Some people don't. You got to keep a journal. You have to. And again, it's not just putting down, hey, this was a win, this was a loss. You got to mark down and categorize your trades if you really want to do well. Categorize your trades and say, wow, look, every time I do calendar spreads, look what I'm doing. Or every time I sell puts on stocks, I have a high percentage of win rate. Or anytime I'm going out, when I go 2 months out, I get screwed on the trade. You know, I don't do very well. You know, so there's reasons why I've gone ahead and like I said, I go further out. I go, typically when you take a look at me doing options, I go in the money, and I go pretty deep in the money where I'm extracting that extrinsic value. but I got that all from taking notes. And I still take notes today. I still have a notebook that I journal my stuff down and journal not just the trades, but how I'm feeling and what type of trades I'm doing. And those all lead to making you a better trader. You've got to journal your stuff in that journey. And it's not just looking at the charts and making the trades. It's really comes down to you as an individual. And that's, it's great to be able to go ahead and get ideas from somebody, but you're never going to get ahead if you just keep copying somebody and following somebody. You got to go ahead. I get ideas from everybody. I mean, I took notes on everybody, what everybody was saying, whether I know I'm going to make the trade or I don't know if I'm going to make the trade. I took notes on that. I'll go back later and I'll analyze these things. And if they make sense to me, and they make sense for me from a fundamental point of view, from a story point of view, from a technical point of view, I'm going to make the trade. If they don't make sense, I'm not going to make the trade. I don't care who's going into it. So it's all about knowing you and what your system is. That's what it comes down to.
If I may, the major parts of each of my journal entries for each trade is, again, I do the 3 checks. I talk about, I journal about the technicals, I journal about the company, and I journal about the sentiment, whether it's my own sentiment towards the company or what I feel the retail people or the retail sentiment is for it. And then I write down a thesis on what my trade is going to be and why I'm taking it. And then after I close it, why did I close it? What was the specific thing of why I closed it? And the other thing I do in my journal is I don't look at my profit and loss per day, because that would just tear my initiative apart, because some days it's not a win. I look at it on a longer term. So I usually go a week, look at it at the end of the week. And if at the end of the week it's a loss, then I take a step back and I read through my journal for the week, and I try to figure out, why was it a loss this week? What did I do? And that gives me something to actually look at the end of the week to make me feel better. Not that I'm a loser, right? Not that I'm a bad trader, but that I made mistakes, and what mistakes did I make, and how can I not make them next week, and take it just a week at a time.
Yep. Good advice. Good advice. All right, guys. Well, everybody have a great rest of the weekend. Appreciate you guys jumping on the call. Always enjoy collaborating with you guys, and hopefully you found this useful. I have.
Thanks a lot, everybody.
Thank you.
Yeah, I've recorded this, so I'll post it in the
Thanks,
group as
guys.
well.
Enjoy your weekend, guys.
Thanks, guys.
Thank you, everyone.
Bye.
Bye, everybody.